A surprise rally to start the week. Given the increase in geopolitical tensions and the soft economic data, not many thought the Dow would rise by triple digits, but it did, and the bulls remained in control until the closing bell. The Dow Jones Industrial Average gained 183 points to 20,636, snapping a three-day losing streak to notch its biggest gain since early March. The Nasdaq added 51, and the S&P 500 was up 20. But given all the negative factors swirling around, why were investors in a buying mood? Bob Pisani explains.
Stocks rose today. The big question is why? We opened weak and with good reason. The economic data on Friday and this morning was poor. If you look at it, you might scratch your head and wonder what happened. For example, retail sales fell for the second straight month. Consumer prices dropped for the first time in a year, and producer prices were down for the first time in 7 months. It sounds like the move toward growth is on life support. But the markets turned around shortly after the open. The most obvious reason is that the market has become very oversold and it's bouncing. The most oversold sector, banks, are the ones that bounce the most, so this makes sense. Other sectors that have been trending down, like semiconductors, industrials, and materials, they also perform better today. Now, geopolitical jitters resurfaced last week after being dormant for a very long time. Now, you can see this in the performance of the so-called fear gauge. What does that mean? It means traders bought a lot of protection ahead of the three-day Easter holiday. And since nothing happened over the holiday, that trade was being unwound somewhat today. There's one final potential catalyst, tax day. It's ending tomorrow, and the weeks leading into tax day have traditionally been down modestly for the market, with a modest rally in the weeks after that. That seems to be playing out as well, at least today. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.